All right, let's take a trip back in time to the crypto boom of 2018. Now, we're not here to talk about the USDC you might know today. Instead, we're going to dissect the original white paper for a project that just happened to share the same name. Think of it like digital archaeology. We're going to break down exactly how these really ambitious projects were pitched, what problems they said they'd solve, and, how they asked for millions of dollars. So, let's pull back the curtain and see how it was all done, starting right at the beginning with their core promise.
Okay, so every great pitch needs a hook, right? A simple, powerful promise. And right there on page 4 of the white paper, they lay it all out. They called it the United States dollar coin, or USDC. The big idea? A digital token pegged to the US dollar specifically made for beginners. They wanted to create a safe on-ramp into the, let's call it the Wild West of crypto. And those keywords, safe and beginner-friendly, that wasn't an accident. That was a direct appeal to a market that was blowing up, but also getting pretty nervous.
And this is where you really see the aspirational tone kick in. They weren't just selling a token. No way. They were selling a vision. This quote frames the whole project like it's some noble quest to give people a new choice and, more importantly, to reduce risk. I mean, in an industry famous for being a total roller coaster, that promise was gold. A super smart way to grab attention and start building trust right from the jump.
So, once you've set that grand vision, the pitch follows a classic playbook. Step 1, identify a huge, scary problem that your product, conveniently, is here to solve. The white paper paints this picture of the crypto landscape as revolutionary, but also completely chaotic. A wild market just begging to be tamed.
And to make that problem feel real, like really real, they hit you with a number, 9,363. So what is that? Well, according to the document, that's how many different ERC20 tokens were already out there on the Ethereum blockchain. And they didn't call it innovation. Nope, they called it undue clutter. That's a clever bit of framing, isn't it? It turns this explosion of creativity into just overwhelming noise, making it impossible for a regular investor to find anything of value.
And then, right after showing you all that clutter, bam, they show you the stakes. The entire digital asset market, they said, was worth over $650 billion. Putting those two numbers side by side is such a powerful move. It basically says, look at this massive, valuable market, but it's also a confusing mess. The implication is obvious. You need a guide. You need a safe harbor. The white paper then really doubles down on the fear factor. It lists all the boogeymen that kept crypto investors up at night in 2018. You've got insane price swings, the volatility. You've got governments making scary noises about regulations. Banks were shutting down accounts. The media was having a field day with bad press. And the tech itself was often slow and just clunky. By listing all of this, they're creating anxiety. They're basically saying, hey, it's dangerous out there, but don't you worry, we've got the answer. And right on cue, we pivot from the problem to the solution. After building up all that fear, all that uncertainty, the white paper presents USDC as this clean, simple, elegant answer. So let's take a look at this price guarantee plan that they pitched as the ultimate safe haven.
Okay, this is it. This is the heart of the solution. A promise. They guarantee a stable value pegged 1-to-1 with the dollar. But, and this is key, redeemable in the big crypto players of the day, Ether and Bitcoin. For anyone who is scared off by all that volatility we just talked about, this sentence was basically a lighthouse in a storm. And that word forever? Wow, that single word is doing some seriously heavy lifting. Now this is where things get really interesting. This slide right here taps into the core ideology of early crypto. The paper creates a clear villain, central banks, with their so-called politically motivated goals. And then it positions crypto as the hero of the story, a pure system free from anyone pulling the strings. So this wasn't just a financial pitch anymore, it was a philosophical one.
To make the big idea feel less abstract, the paper then lays out these really practical, user-friendly features. They're promising fast, 5-minute transactions, which at the time was a huge deal. They promise to accept PayPal, basically building a bridge between old money and new money. And they just keep hammering home that this is for beginners who want to profit. The whole thing was about removing friction, making it as easy as humanly possible for someone to say yes. Okay, so we've seen the problem, we've seen their solution. Now we get to the heart of pretty much every white paper from this era, the ask. This is where they lay out their initial coin offering, or ICO, and tell you exactly how you can give them your money.
First up, the top-line numbers. A total supply of a nice round 100 million tokens. Of that, 65 million, or 65%, were going to be for sale in the ICO. These are just clean, simple numbers designed to show the scale of the project and to find the opportunity for anyone wanting to get in early.
And here is how they created that sense of urgency. The pitch had this tiered discount structure. If you were one of the first investors, you got a 20% discount. That's a powerful reason to get in fast, right? This declining bonus is a classic sales technique. It's designed to get momentum going and lock in funding early on. It basically gamified the whole investment process.
But beyond just the sale, they also pitched a classic 2018 growth hack, the airdrop. They were literally giving away free tokens for doing simple things like signing up, adding your phone number, or getting your friends to register. The goal here wasn't just to raise money, it was to build a massive community from day one, using their own token as a marketing tool.
So after laying out how to get money from investors, the pitch pivots into its final act. This is where they shift from the ask back to the vision. Let's see how they justified the numbers and laid out their grand plan for the future.
This chart here, the token distribution, it's all about signaling transparency. You see the big 65% chunk going to the ICO. Then there's 15% for the founders and their advisors, and the rest is split between the airdrop and just general company expenses. For any potential investor, this is supposed to be a quick, easy snapshot of who controls the supply and where their money's going.
Now this is a crucial detail, and it was put there specifically to build confidence. The paper says that 90% of all tokens, including the ones held by the team, would be locked up, frozen, for 2 years. This was a direct message to investors. It said, "We're in this for the long haul. We can't just sell our tokens and walk away the day after the ICO." It was a really key way to signal commitment.
And finally, the roadmap. Every good pitch needs a compelling story about what comes next. And here we see a pretty clear, if maybe a little ambitious, timeline. Finish the fundraiser, get listed on a major exchange within a few months, then build out more tech, and finally, go global. This whole slide is designed to project competence and ensure that they have a clear plan for how to use investor money to grow.
Looking back at this document is fascinating. It's like a perfect snapshot of an era defined by these huge promises, really bold visions, and a very specific formula for turning an idea into millions of dollars. It mixes the tech solutions with these big ideological arguments and some really powerful marketing tactics. So the real takeaway is a question. What does a pitch like this tell us about the nature of hype? About the stories we're willing to believe during these tech booms? And really, about the anatomy of a financial revolution? Something to think about. Thanks for tuning in.